Testing the audio. I think we're all good to go. Welcome back, guys, to another post trading analysis video. I'm actually excited to make this one because we did catch a nice trade today, and there was some nice price action um, where we can learn from. Okay, so trade was on Bitcoin. And as always, to build some context, it's fairly easy. We are inside of a range. We have hit extreme supply, aka the last supply remaining before tapping the range high, and we've hit extreme demand, aka the last demand remaining before tapping the range low. So, we've been just ranging, having internal rotations, not taking the extreme points, which is this low and that high, which is our range low and our range high. And, we're just spending some time in the upper section of the bigger range, aka premium pricing. And from there, we just, formed yet another range. So it's fairly easy. Checking the volume profile, we're hovering around that volume area high. So in general, you would rather be shorting than longing, but either way, both sides can work if you just trade this local range, okay? But for any significant follow through, me personally, I was looking for, a bit more downside because we're in the upper echelon of this range and the volume profile. We have some lows here, some Asia lows. So I was just trading the local range, watching for potential distributions into that volume area high, or even just taking that high in general because we don't really have anything stopping price from taking that high, right? So I was trading this local range, and if we just follow market structure, for the people that don't know how I put my range, if you follow market structure in the most recent expansion up, we have high, low, higher low, higher high, higher lows, all the way up. There you go. And then you deviate that high instead of breaking it properly. So there you go. Top down, there's your range. Okay? With your initial range high and your initial range low, the purple dots, and then that first sweep of the range high right here. Now, I was just watching literally both sides of the range. I was just trying to potentially take both sides of the range. And what I noticed is that, we had London open right here. And let's actually pull on this market sessions indicator. Shout out to Luby Lou for putting me on this indicator. And this actually it's very nice. So it just gives it just shows which candles are part of which session, right? So as you can see in purple, you see all the price action during Asia. In blue, you see all the price action during London. And in orange, you see all the price action during New York. Actually, a very good indicator with a simple overview of, where are your session highs and where are your session lows. So right here, we had our range low, which was also our London session low. And the range low was a bad low. Why is it a bad low? Well, if we get rid of this dot, these lows don't have a wick to the downside. Okay, they don't have a wick to the downside. If you just compare it to almost every other candle, most highs have a wick to the upside, or and most lows have a wick to the downside, and these ones didn't. So I was like, what? Since we've just been ranging very tightly all throughout, the second hour into London until New York Open, during New York Open, sweeping that low, breaking structure back inside for a rotation, that would be nice. That would be nice, right? So that was my plan. I was planning on taking a potential short from the range high, indicating a 1 tap, 2 tap, 3 tap, and a range deviation trade from the range low. Now, mind you, when we take a range deviation trade, we cannot target the opposite extreme point. I cannot target the range high per se, because just like this bigger range, you can have internal rotations. You can have many rotations before taking an extreme point, right? Before taking any of the extreme points. The same goes when you have a range on a lower time frame. It can have internal rotations. So it can, for example, grab this low, break structure back inside, squeeze up, not take the high, and just go lower, right? It doesn't have to take that high immediately. So be aware of that whenever you have your targets ready for a range deviation trade. But that was basically my thought process. I was watching a sweep of the high, watching a sweep of the low. And then what actually happened coming into New York Right here is where New York opened at 1530. Boom, right here. New York opened and it came down and it took that low with a nice wick right here. Took that low, nice buy candle where you have a wick to the upside. It closes bullishly. Right here is when you break structure on this candle. That's my entry. That's my stop loss. And then to confirm an entry for a range deviation trade, we need to have a close back inside the volume profile. And of course, we also had that. Okay. Close back to the volume profile to confirm a range deviation setup, trading the second tab, because it's always a bit more risky to trade the second tab. And we didn't really have any significant resistance zones all the way up towards that high. So I was, with this trade, kind of aiming to eventually take that high, right? But just looking at liquidity, we have this high and we have a higher high, and this high kind of took this high, right? And then you have these two highs here. So for like my easy liquidity target, I would draw those highs, take those highs. That's a nice liquidity target for me to have. Okay. Let me check the volume profile again real quick because I forgot. Yeah, it's like kind of deviating, having a move up, kind of deviating that volume area high, grabbing that liquidity before, it decides whatever it wants to. So this was initially my target for the range trade. Boom, boom, boom. Not the best RR, but I was kind of confident that this deviation was going to work because it was aligning with those market structure or market session highs and lows, right? But I was gonna take out some profits here and then potentially let the rest run towards that range high, which would be my ultimate target. Now, what ended up developing is that we got a move up, very nice, confirming this break of structure, and then on this, sell to buy, we left behind a 3-minute demand zone. So this was your extreme demand. I don't know if we tapped that. Or did we tap the whole demand? Let's check. No, we didn't. Okay. Well, as you can see, this is what happened. But this whole zone is demand. The whole sell to buy is demand. However, within that zone, you did have a more refined zone right here. And that's why whenever we got that break, so whenever we got that break of structure right here, which is what my entry was, my stop was below this low, but I didn't feel confident trailing my stop towards this low the moment we broke the high again, just because, it had that demand zone right there. So I didn't touch my stop loss. I took a 75 take profit right here, and then what followed after was, it was a limit order here, and what followed after was a straight shot up to my other TP at the highs. Okay, so I realized around a 1.8% gain, which is fairly nice. They say 1% a day keeps the day job away. So a very simple, very nice trade. It was well prepared, well pre-planned. And from here, of course, we were looking for that distribution because overall, we are in the premium pricing of the bigger range, and we were at that volume area high. But as you guys should know by now, to confirm a distribution trade, you have to break structure from the low up between tab 2 and tab 3. Structure from the low up is high, low, higher, high, higher, low, right? So there's literally, in this whole move, there's no structure. So there's almost no way that we can confirm an entry in here. The only possible way to confirm an entry is to close back inside, get a retest, and break structure back to bearish on the retest. Because that would indicate that this could be the test or the LPSY, whatever you want to call it. And then it's enough to look at this structure pool. But overall, it's better to break structure from the low up from the initial move. But this is also a valid scenario, right? To short the test or the market structure break on the retest leg, which would be the test of the Wyckoff schematic. And looking what happened on the 1 minute, we got the exception back inside the range, or the acceptance back inside the range, but we came so low already that I was like, yeah, this is not, I don't think it's going to give us an entry. And it did come up a bit, but it never gave us valid structure. So you may look at this as a structure pool, but you don't have the like the 4-candle rule, right? Where you have the move up, you have the 2 candles down and the 2 candles up. You don't have that. You don't have 2 candles down here, consecutive candles down. You have two black ones, but they need to be back to back, okay? And you don't have that here. So it was no structure, but I was pretty confident that from here this will probably be the test. But it wasn't a trade, okay? You can kind of know where price is heading, but it still doesn't give you a trade, and that's totally fine. So at this point, we just extend our range. We see the potential distribution. This is the target of the distribution, possibly even going lower, sweeping these lows. That was my initial idea, but step one was to break that low, to break this low. If you don't break that low, you're not going to have any follow through. So, and we still had the demand zone right here. But just looking at what happened is that we kind of moved down and lower, okay? So we wicked the low, and we were kind of failing to take out the low. And I'm looking at this, and this looks like a structure pool, but again, it's not, because you don't have those 2 candles up, because this is your highest point. So there's no structure. So your 1-minute structure is right here. Then just checking how price develops from there. Are we going to break back inside the range? We were kind of coming down, but look at that. Look at that. This is our extreme demand zone, okay? This is the only demand remaining to protect price from coming towards the 3rd tab low. Because, as you guys should know, Wyckoff can flow over into each other. So a distribution can go over into an accumulation. Normally, this would be like the case if you're in like a range discount setting or something like that. But it can happen at any time. But I would prefer it to happen in a range discount setting, or like a swing long POY, where the objective of this distribution was just to take out the low ones more to form an accumulation and then go higher. But overall, we were at the volume area high, and we're at extreme premium pricing, right? So the idea of an accumulation here, a Model 1 accumulation, I liked it less, okay? I liked it less. However, just the same way I told you guys, you can short a test here if you break structure from the low up between these 2 points. The same way you can long a test here if you break structure from the move down, right? To create the test. So if you look closely right here, you do have structure. You have 2 candles up, 2 candles down. Boom. That's your 1-minute structure. And since we tapped extreme demand after putting in a Wyckoff Model 1, if you break that high, there's really no reason to come lower than this point. There's zero reason. Zero. So you broke it right here, and I was kind of hesitant. Because, normally, yes, this can be the case, and you can actually long it up. But as I said previously, we were in an area in the bigger range where a distribution would make more sense, while also I don't really like to long in accumulation when we had a distribution with such an aggressive follow through, because at any given time this market structure from the low up can break, and it can just turn into a bigger Wyckoff schematic where this Model 1 goes over into a Model 2. So yeah, you can kind of take the risk, because you can kind of take the risk of, saying, fuck it, this looks like a Model 1. It's a valid Model 1. This is a valid entry. I can long it up here. Maybe we got the retest. Yeah, I can long it here. I can put my stop below. If I target the high, which would be the target, it's a nice 4.7% gain. And, if it's going to put in a lower high to form a bigger distribution, it will most likely happen at this supply zone, because this is really the only supply zone there is. Or if it happens somewhere in here, I'm already in major profit, so I'll just take a TP and de-risk myself, Okay. You can say that if we were at a swing long POI, I would have said the same, and we had a distribution, and we're at like premium pricing in like the bigger context. I didn't want to take it. So I didn't take this trade, but of course, what happened is price got a retest for the higher low. Yeah, got a retest for the higher low. So your stops would still be here. I'll be safe. We got the higher low, got the higher high. That's when you drill your stop loss right there to risk even less. And then from there, we kind of just grinded upwards. Rejected from the supply, but as you can see, we never broke structure. So following structure, we had a high, higher low, higher high, higher low. And again here, higher high. And now you can already start scaling off. You can scale off some profits here. Especially if you have a distribution, I would always scale some profits in premium pricing because, you don't have to take that high. You just took that high. So it's not really a liquidity point anymore, in my opinion, because it took the liquidity from this high and this whole move down, right? It had that peekaboo effect. So I don't really want to call this a liquidity point anymore. So, yeah, from there, you kind of failed to take out the 2-minute high. I'll let it play out real quick. From here, it's going to go up. Yeah. So what kind of developed from there is that, you should have taken some profits at this. You should have taken some profits in the premium pricing if you were long from here, right? Long from there, your stop is there, and slice some profits up in that premium section. And then what happened is your 2-minute low was here, and then you failed to take out that low. And then you did have a break here, but this happens very often. So I'm going to share a little secret with you guys. If you're in a Wyckoff schematic and you're kind of sandwiched between two Wyckoffs, it happens... Oh, almost spilled my water. It happens very often that you get this and people will call the break and they will short on this break. I've had it in the past. They short on the break thinking it confirms this distribution, with the bigger Model 2. And then literally you immediately get stopped out. It just flies up. Like, always be careful, especially if your break is this tiny. Just wait for more information, okay? Whenever we have two Wyckoff schematics and I have to confirm an entry, a closing candle like this, that's not what I want, not what I call a break at all. Like, I will have to see this and then see a pullback with maybe a reconfirmation. So be aware of that because this is very typical. But you only know that through experience, right? This is why you have to, put on those hours because you notice those tiny little things that trap you in the beginning. So for anyone that took this, congrats. It did take that high again, which is still a bit unlikely if we skip replay mode. You can clearly see that I think we're coming for that range high sooner than later, right? And I will look for a short if we come there, because the way we've been coming up is like we have a massive liquidity curve going on. Like, I'm talking massive. Would be nice if we had like a range right here with a liquidity curve and we broke above, everyone thinking this is going to be a V-shaped recovery, just to have some manipulation before we have the expansion back down. That would be pretty fucking sick. That would be pretty sick. Get everyone hyped again, thinking, this was just a deviation. We're going to have a V-shaped recovery from here, and we just smack them down. So yeah, I would actually look for something like this, but it doesn't have to be like a PO3. We can also just have a range deviation, break back inside, and then we just short a retest, right? Checking this volume profile once more. Yeah. So something like this would be nice. Deviated, break back inside that volume profile, find a short here, target all this Asia, sell side liquidity, right? So that's what I'm looking at now. I didn't take the trade or the long, which was actually the best trade of the day. But I don't mind because I was watching and I was like, I'm not sure. Just a long up here when we have a distribution with such an aggressive move down. I'm not sure. Okay, I've seen it fail. I have seen it fail. So just because it happens and works this time doesn't mean I have to apply it every time, right? And of course, in the moment, I don't know that this time it's gonna work. So again, 1.8% gain, more than happy. 1% a day keeps the day job away. And hope you guys learned something. If you have any questions, let me know in the comments. And actually, don't just watch my videos as like a hobby and listen to it. No, actually learn from it. Digest the information that I'm giving you guys. And also, don't watch my videos all the time if you're not gonna trade like me. At least apply some Wyckoff trades or some, market structure breaks. But if I am not trading the same style that you're trading, you don't have to watch my videos. Because I see a lot of people, they're doing market structure and then they're combining it with fucking order flow and then they're combining it with, indicators. And I'm like, if you have found your edge, that's fine. But you have to realize if it's not working for you, it's not working for you. There is this certain limit of trying to make it work where you just have to say, no, it doesn't work. I started off with Market Cipher B as an indicator. I tried to make it work like properly for a year and it just didn't work. So then I had to put my ego aside and pivot. Pivoting is very important, knowing when to pivot. I tried Exo charts. I tried it for 6 months. I really tried to make it work. I put in the work. It didn't work for me. It wasn't my style. I don't like entering on immediate SFPs and stuff like that. Then I found market structure. Market structure works for me. But you don't see me using market structure with indicators and stuff like that. No, you have to master market structure. And once you've mastered market structure and range theories and Wyckoff distribution and accumulation schematics, maybe then once you're goated at that, you probably don't need any indicators anymore. But if you want to combine it then, that's fine. But don't just half it. Become a master. Okay? And put in that work. So I appreciate you guys for watching it. Hopefully you learned something. If you have any questions, let me know in the comments. And I'll see you guys tomorrow. Actually, I am traveling Wednesday and Thursday for summer vacation to Spain. So I don't think there will be a video Wednesday or Thursday. And then Friday we will do an update. I'll try to trade, but I'm traveling to Spain. It's summertime. This is not the time to, go all in on trading live. This is the time to reflect on how you have traded these past 6 months, what you can do better, go and back test, because volatility is slowly decreasing in the markets during holiday season, and then it will pick back up after. I would say like February, March, April are the best 3 months. And then you have September, October, November. Those are the other best 3 months. Those are like the best 6 months to trade. And then you have summer, and then you have like the Christmas vibe, New Year's. It's all kind of sketchy, right? So those are the best times. So again, if you see your setup, of course, trade. Like there's still going to be setups, but overall, these aren't the best live circumstances to trade. So if you're pretty new, don't think it's always like this. Like, trust me, Feb, March, April, and then September, October, November are like fucking fire. That's where I make most of my money, okay? So, yeah, I'll be traveling Wednesday and Thursday. I'll definitely see you guys Friday. Maybe I'm able to sneak in a video here or there. So you guys will see from me. But see you guys later. Peace.